Good morning, everybody. Just doing a sound check here, making sure that things are smooth. All right, yeah, we're good. We're good. Alrighty, we are going to go ahead and get started here. Just going to pass the microphone over to SPDas. SPDas, the trading floor is yours, ready to go when you are.
All right, thank you, Igor. And once again, warm welcome and good morning to all of you. We are now beginning session two in New York. It's just about 9:30 Eastern now, and I don't know when the noise is getting triggered, but Euro is just hovering around the 31 mark. Maybe we might be just inching towards 30 50 and 30 80 in the next few hours or so. But I think we should be now out of uh, the sideways action, which we have seen in the past two trading days, actually. All right, so the wave story remains unchanged. Uh, we got wave one, two, three, four, and five. And that's the first impulse, actually, and followed by a corrective ABC zigzag. Once again, we have a lower degree wave one and two. Possibly the third wave is just beginning to pop up, pop its head up. The first resistance is now seen at 413 and a push above 356. See the past support becoming resistance zone. A push above that zone certainly confirm that this is no ways a wave four of a potential impulse lower. All right, trading point of view, we are still just about the vicinity of getting in the optimum side to buy. Uh, Prices are just around the 330 mark. So we can go ahead and do that. We can stop around 1.0200. Just in case if you want to be on an absolute safer side, it is better to keep for a while around 1.1, 1.0150. All right. For those who are just joining, I might want to show the larger degree counts. We've got the five waves rally. That's an impulse. Larger degree trend indicates an uptrend, which was actually meticulously retraced. It took 2 years actually between July 2022 and January 25, more than 2 years to, uh, to to form that correction ABC. But finally, we are there, and it looks like now we are getting another trend started. It takes a while when it's starting. When if you look at the pattern of wave two here, it took a while. It was an expanded flat actually, so it actually took a while for wave two to settle down. Sorry, but once it started pushing higher, I mean you can see the way it rallied all the way from 97.97 to I mean 1.10, about more than 300 pips. If you look at the candlestick chart, I don't know if there is any pattern it is forming right now as we speak. We did have a morning star after the 13th of Jan. That was a beautiful morning star. Right now, yesterday was a doji and today is a bullish candle. Uh, it remains to be seen if it's going to be another morning star or not. But whether it's a morning star or not, we are good to remain on the long side. All right, so that's the daily story. Let's Euro USD potential longs are active. They remain active. The stop around 1.0150. Even if you place it around 1.02, it's okay technically. All right, the daily chart has now started to slightly ease off a bit from 108.30 handle, right? It went up to 35 but couldn't sustain at all. We're back to 1089, and it remains to be seen if the momentum is going to rise or increase on the lower side from here. It was a quite shallow retracement though. Okay, so those who are joining in, for them the larger degree counts for the dollar index are as follows. It was an impulse drop indicating a potential larger degree trend on the downside, which has been traced corrected easily again for half years. Although they were reaching to 110.20. That's 61.2%, slightly higher than that. The good point is it reversed right from the past support coming resistance zone. And that means a lot actually in terms of major turning points in the market. They are somewhere close to past support turn resistance area or past resistance turn support zone. Right, and the Fibonacci 61.8% for northern trend lines. These are the points where we kind of look for a major turn. And of course, with the counts here, it's larger degree wave 2 as well. So going back to the hourly, there's no specific change happening. It is an impulse followed by a correction, yet another impulse followed by yet another correction. So lower degree waves, ones and twos and ones and twos are being called out, at least two instances now. So it's good. It's good to see that the third wave is just about to resume lower, and potential shots could be still taken. We are not leaving 108 handle, at least for now, unless it is carving out an expanded flat or a corrective wave, which could push prices back towards 108.60 zone. They are good to remain on the short side, but the stop loss ideally should be 110 or just above that point, 110.30. But even if you keep it above 109.85, technically it is absolutely correct. No worries at all. All right, so dollar index, an excellent candidate to sell on rallies, to sell at current price as well. But but a break below 107.66, you know what? It's not going to give us any further chance to go and sell. So if you got to do it, you got to do it now or about 108.60 if prices rally. All right, so that's the story in the dollar index. Sell on rallies candidate, the potential stop around 109.85. All right, the next one is an excellent case. I mean, two sessions. I mean, uh, Tokyo Sydney was a bit tense. Just after Tokyo Sydney was even tense. But then it was expected, as we discussed in the Tokyo Sydney, that if the dollar index, I mean, it is, I'm bringing up that 4 hour chart again. We we were talking about those two levels, that the area of concentration was somewhere around 2890, 2895 kind of a zone, correct? That was the area of concentration where we are expecting prices to turn lower again. But as you say, markets do what they want to do. It's not necessary that a Fibonacci ratio is hit and the market will reverse or react exactly from that price. So as it would happen, I mean, a few stops were triggered, but it's okay. It's a part of the game. But over here we had set up a limit order around the 29.10 that was not triggered, but you can keep that limit order or you can sell aggressive right now. It is absolutely up to you. If the risk management is permitting, then you can sell right now. If it is not, then wait for a price action to rally 10, 15 points more, or possibly a couple of 20 points from here, maybe 29, 20 something. Okay, I can give you an exact figure. We are still, I think we are still, I mean, if, as I said, there is an internal five wave drop, but if we still go by what hourly chart is showing, it's one, two, three, potential wave four, and then wave five. Uh, if you allow me to take the retracement of the entire drop once and for all, the resistance zone is coming around 29, somewhere between 29.12 and 29.20. So if you're wanting to trade exact at optimum price, then it should be around 29.12 and 20. But taking partial shorts, I mean, let's do it this way. You can take partial shorts right now, 29.01. Remaining, you can go and take at 29.20 or 29.15, 20 zone. I think we should be good to remain on the short side thereafter. And the stop loss, potential stop loss would go around the 29.55, 29.60 zone. And ideally, if an impulse is now complete, which looks complete on a 5 minute start or a minute chart, this is the high or peak, which is not really seen on the hourly chart. So if you count from here, it's kind of wave one, two, sharp wave three, and four, and maybe five, or we just ignore this and say it's wave one, two, potential wave three, wave four is being called out right now, and there could be wave five lower again. All right, that's quite possible. Let's check the Fibonacci, 38.2% touch. It's there, right there. So, I mean, technically, it won't be incorrect to go and sell the market here. Did I take a channel? Yes, I took a channel. No, but it's not a channel that we should be taking. It's a it's a parallel channel, right? So uh, it could be the wave four may push through 29.10 or something. That would be an even better entry, just 8 points above the current levels. So somewhere between 29.10 and 29.20 would be the range that you'd be looking for to sell. And the stop loss ideally would go around 29.55. Now, remember this is a 5 minute chart, but still if it's a leading diagonal in the process, sorry, it could possibly be a leading diagonal in the process. Maybe you've got wave one, two, three, four, and possible wave five. It's absolutely so. We complete five waves in the next few hours, or maybe early Tokyo or just before the Tokyo. Why I'm saying this? The last session also we were talking about 28.95 being taken out. That has happened now. All right, and the reason why I'm saying it completes uh, five waves is that look at the candle today. It's a doji, correct? So if it has to be a doji, and ideally it should be a doji by the end of the day for an evening star to materialize or begin materializing tomorrow. So that's how I simply calculate what could be today and what could be tomorrow. It's not a rocket science at all. so so I don't know whether it's going to cover a wave two or three. I mean, third wave could be extending. I mean, it could be anything. It could be five complete and then a retracement, or it could be a retracement confirming the second wave within the third wave. It means also that third wave is extending. Bottom line is that we should be finding resistance somewhere close to 29.15 in that case. That's why I'm saying it's good to keep in mind the range 29.10, 29.15, or 29.20. All right, that's the range where we'll be looking forward to go and short uh, gold again, and we can carry forward. I mean, let's take an extension. If it were to carve five waves lower now, so we've got 2866 on cards in the next few hours, possibly. It should be a good one, actually. All right. So that's the story in gold. We can sell partial right now and remain short, or maybe you can add further when prices rally towards the 29.20 mark, and that would be quite a good one. Uh, and then take it forward towards the 28.60, 28.50 zone. Correct. But I think the charts are now beginning to tell us a story. What did I do there? I changed the color. Okay. Hollow candle set. Actually, it was a bar to be taken. So the charts are kind of now telling us a story, or beginning to tell us a story, that a potential top could be just in place. And if that is correct, then we are, I mean, gold is poised for a decline five waves lower. Just a moment, I need to connect the battery. Okay. So gold is heading south in five waves to complete that expanded flat structure. An expanded flat, remember we had A, B, and C. There you go. It looks, it's looking okay now. So we've got that minute wave A followed by minute wave B, which really got extended, and a couple of stops were also triggered of ours, but it's okay. That's a part of trading game. And if you found a top, it's just a matter of time. It's all going to be recovered. And a five-wave drop can actually carry us all the way through below that 2540 mark. And we're looking forward towards 2500 going forward. All right. So I think that that story is now beginning to unfold towards our favor. All right. So minor wave five may still take a while to materialize, and it looks good on the daily chart as well. Because if that's an expanded flat, then it falls with a guideline of alternation as well. If wave two is sharp, wave four would be sideways, or it will take time. That's an expanded flat in the making. And if wave two was a triangle, or a flat, or an expanded flat, wave four would be sharper. All right, so we've still got some support levels to be taken out. So let's not get too much onto the sell side aggressively. Partial shorts around 2901, remaining around 29.10.20 range, stop potential stop around 29.55 and targeting 28.50. Once that is taken out, 28, it's actually 35, but once that is taken out, it's going to be a much price confirmation that gold is heading for a deeper correction. All right, sir. So we've got three done. GBP USD, we have trading interest as well. And for now, this guy has taken out for 2400 handle. Just below a few hours, just before a few hours actually, London times, we were trading 2355. I remember, and I also pointed out the RSI just bouncing off the 30 mark. So finally, it's taking. I mean, if you had bought at 30, 23.55, it's already 50, 60 points right now. I mean, you might be taking intraday profits if interested. And if you're a positional trader, that's actually advisable. Why? Because lower degree waves ones and two are looking in place now. And if that is the third wave, then it means real business, and it won't take much time for pound dollar to cut across the 2800 handle. It's about 400 points higher from here. All right. So if you've got two positions, then you can keep churning on one of them. But if you've got one position and only one, then you can take partial profits and again enter. But otherwise, it's advisable to hold on to that position for another 400 points rally on the rally towards 2800. Let's have a look at euro quickly. I think that should also be preparing to cut loose on the north side. At just about 34, just 2 points here and there. That's okay. All right, we can have a look at Bitcoin. We're not trading again quite a few sessions now, but as I said, this this chart is somehow not giving the conviction of a bottom formed at 97. It's finding resistance. It's not been able to take out that 100,000 mark. It needs to take out at least the 100,000 mark. In fact, it needs to push above 106 for the conviction to or the momentum to build. Just in case if it drops lower from here in a three-way form, in a three-way format, sorry, then it could break below 87 or 91, 91 or 87, sorry. Unless it is wave 4 in the making, which could be possible. We have got wave 1, wave 2, wave 3, expanded flat wave 4, and possible wave 5, then that would be the impulse. And we can really take a chance thereafter. I mean, so it completes an impulse, not an impulse, sorry, leading diagonal. But it would still be a motive wave, motive structure, and we can rely on the motive structure for another at least 5 wave move higher. All right. So no trade recommendation for the coins right now, but just be watchful. A push above 100K would certainly give us that conviction that okay, we can now take a chance on a corrective decline. And US 30, let's have a look there. I don't know if the speech is on or it's scheduled for later. I think it's scheduled for later. There are price action absolutely sideways. So let's take up this in the New York session tomorrow, the indices. Uh, I'd be so happy and so glad to see a 1, 2, 3, 4, and 5 wave decline to consider this as The first wave, first meaningful drop to be sold on a correction. All right, sir. So let's bring the current session to a pause. And once again, thank you for your kind presence. We'll be back again after a few hours to touch base and continue the story, the Tokyo Sydney overlap. Until that time, good luck and happy trading. And back to you, Igor. Thank you so much.
SPDas, always a pleasure. Yeah, it's always amazing to watch you at your craft, and
Thank you, sir.
yeah, I really appreciate that. Uh, Alrighty, thank you.
Thank you very much. Thank you.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com. Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time